This is the Kadena one-year overview reading for the year of 2026. It's currently June 21st, 2024 at 1:44 p.m. Eastern Time. Kadena at the time of this reading is 0.5845 or just under 59 cents USD. The shuffle video for the 2026 reading was created on April 13th, 2024 at 7:23 p.m. Eastern Time. That's the video playing for you in the lower left corner. The overall theme and behavior for Kadena in 2026, this is really tricky. So usually in the theme position, the prudence card on the scale is going to indicate sideways rotation with a lot of back and forth. You might see multiple false tops or multiple false bottoms, but like a lot of back and forth going on, really tricky to get overall direction. And it's crossed with at least one major failed attempt to break through major resistance, followed by a decline through major support. That's on a one-year chart scale. Behavior around the high side, we have a prominent peak that'll stand out on a one-year chart scale with a sharp drop off of that peak. And then behavior around the low, so we should see one of the larger moves of the year out of the low. Now, if you're new to SO meta analysis in this system, I'm going to get into the week-by-week chart behavior, as well as timing the highs, the lows, the best trade opportunities, all of that stuff in a moment. But first, I want to make sure that you understand the timing is usually right on point. Sometimes it's off plus or minus a little bit. If it's more than 2 weeks, it's a bad reading. It rarely happens. Plus or minus 2 weeks of wiggle room, but pay attention to the sequence of events as outlined, chart events as outlined by the prediction, because that will remain accurate even when we're off on timing a little bit here or there. Some of the readings, it'll be like that. So important to know that. And we're going to get into all that in just a moment. But before we do that, I just want to make sure you're aware. The whole purpose of the channel is to transmute some of the competitive energy of the stock market into goodwill. We do that by following the rule of karma for the channel. You go to the resources tab of our website, Tarot for Traders, and 5% of the profits from every profitable trade utilizing this information should be donated forward to one of these charities, or pick a charity of your choosing as long as you're paying 5% forward, and then 5% should be sent back to the channel through one of these links. If you're international, you can use Wise or you can use YouTube tips, and that leaves you at 90%. Make sure to spend that 90% out of love. As long as you follow those rules, you follow the rule of karma for the channel, the universe considers you an angel investor. It's going to send it back to you tenfold for following through. Blessings to all my angel investors. So let's get back into it. So we have a cross-reading congruency here at the beginning of the year. We're going to talk about what that means in more detail in the paid version. We started off with prominent peaks for the year in January, and we declined through multiple support levels into an important trough in the bottom of the range on a multi-day scale for the January low. The January high forms when we have a rally along a diagonal trend line, breaking through horizontal resistance, and meet another resistance before pulling back to somewhere between those two price levels. And it's a prominent peak on a one-year chart scale. There's also possibly another prominent peak on a one-year chart scale in the later part of January, because we've got like price swings in later January. In early February, we have rotation, sideways rotation along key support on a one-year chart scale, rise to meet the nearest resistance, fall back down and continue rotating sideways. There's probably a lot of price change here, and there's another prominent peak probably early to midway through the month of February. The February low forms within a period of volatility when we have a sharp drop that'll stand out in that period of volatility. We got a trade opportunity there. I'll talk about it in more detail as well. The later part of February, we have a decline that ends with a fast sudden move higher, taking us to a peak probably the end of the third week. But early March's futility card it implies that there's a decline off of that peak. That fast sudden move higher ending the decline reverts back to decline, because in early March, we've got an unexpected move out of really scary chart behavior or seemingly overwhelming headwinds. Big move to the upside. The March high is a brief peak that's easily missed, followed by a decline through multiple support levels. We have multiple failed attempts to break through key resistance on a multi-day scale near the March low. And then the later part of March, we have sideways rotation along key support, followed by a big move to the upside, and then sideways rotation at a higher price level. There's a pretty big move higher on a one-year chart scale on the cusp of March and April. There's a prominent peak on a one-year chart scale within close time proximity to the April low. Early April, off of a prominent peak, we have a decline that increases with momentum moving forward in time. And then the April low, there's a lot of price change to meet it, an important support level on a one-year chart scale. Trade opportunity there, we'll talk about in detail in the paid version. And usually when we see the truce card, what there is a notable rally into resistance, which we see here with the bull, followed by like a big move back out of it. Not necessarily a full retracement, but a big move out of it. And the later part of April, we have a period of volatility that ends with a fast sudden move higher, turns into more erratic behavior back and forth through the same price level in May. In the midst of that erratic behavior, we revisit a crest that was recently a past opportunity. We're talking about a crest that's important on a one-year chart scale. The May high forms with sideways rotation, equal amounts of bulls and bear inflow and outflows with sideways fluidity along key support at a May high. The May low forms when we have a sharp drop to meet it, and there's a prominent low there, a prominent trough there on a one-year chart scale with a big breakout out of it. The later part of May, we have a decline from a prominent peak, taking us into another key support level in early June. That key support level, we do sideways rotation, but there's a lot of price change to meet that support between this decline from a peak or crest out of May into early June. Sideways rotation at that key support, and a notable reversal there as well. Another significant low in June, in the later part of June, and the later part of June we have a resistance level that's highlighted that we failed to break through many times before. There's a pretty bullish behavior out of the June low. We have bumping along resistance sideways, probably breaking through, bumping along some more, maybe breaking it through a few times, but the majority of that behavior will be bumping along resistance sideways. And then the June high forms with a rally that offers significant trade opportunity. The June high is within close time proximity to a prominent trough on a one-year chart scale. And I'm also advised to be very careful around that June high. Before we go any further, let's take a look and see how we're doing for 2024. The 2024 reading was created on November 14th, 2023 at 1:32 p.m. Eastern Time. Remember what I said about plus or minus 2 weeks of wiggle room. So we've got a lowest low thus far here, and it looks like it ends up being in February, when I have it kind of for like March, but we did have a sharp drop here in February, which was predicted. And then we've got highest high around April, May, and it looks like we were a little bit late. We had a highest high here in March, put another sharp drop off of the April high. That's a universal hexagram drop. We established support in May. There's a pop and then a drop. That's that lover's card. And we're also at lowest lows again, right? I have this lowest low here in May within close time proximity to the May high. And that's pretty solid. We were off on there being a high here. So we're a little bit off on those highs. But as far as the lows are concerned, solid lows. We did nail some of these highs. And what we should see is an even lower price level as we continue into August. As far as trades are concerned, could have opened up a short here in January and closed it at the low in February. That would have worked out quite well. Off the February high, there was opportunity. Not the best, but you could have made some money. There was a trade opportunity there. That probably would have been a little tricky. That one wouldn't have worked out so well. So you see, they're not always going to work out. Most of the trades are pretty solid, but occasionally, you know, that's why I always tell you guys, never bet everything on one trade. Like, just trade responsibly. If you trade responsibly, you'll have a superior edge. If you don't trade responsibly, you're going to mess up your psychology. You're going to do silly things, and you're going to see yourself be right and still lose money. And the main theme here is opportunity to open up a short position in the midst of a rally, cross with a decline off oversold territory. With the June high, you could have opened up a short position before a sharp decline, which you're probably best off closing at the very end of June. So overall, pretty solid. Not my best work, but this was done in 2023. I've done so many 1 years since that time. In 2023, 1 year readings were kind of like new. It was a new addition. I've gotten so much better since then, it's ridiculous. So let's get back into it. Oh, and if you're interested in a paid version, really great way to support the channel. There's 3 ways you can do that. Check it out here. You go to our services, SO Meta Post, scroll down to 1 year report, click here to order, and you click on choose when they're discounted because they've already been done. Roughly like a 48-hour turnaround. You basically just pick whichever one you want. There's some 2025s in there as well, and there'll be some 2026s in there pretty soon. As we release them, as people order customs or we put out 1 years, we add them to the list. You can order any of them here at a discounted price. Or if you're interested in a ticker that we're not covering or crypto that we're not covering, click on 1 year report, click here to order, click on custom report, specify the year, specify the ticker of crypto, add to cart. Great way to support the channel. Well undervalued or underpriced, I should say. And the final way that you can go about getting the 1 year report through one of our total access members, it's our top tier subscription. You go to SO Meta Post, scroll down to total access, click here to order. This gets you access to the paid version of basically everything that we have, all of the 1 years that we have, and as they come in, new ones come out, you get the access to all of those, and you also get access to the monthly paid versions of the monthlies that regularly come out every month, as well as any one-offs that people order that we throw out there. All of that you get with the total access subscription. Best way to support the channel. Much appreciation. Everybody does that. Love you guys. Let's get back into it. In early July, we have sideways rotation. I'm advised to be cautious here as well. Near the sideways rotation, there's a prominent trough on a 1 year chart scale. Sideways rotation that ends with a fast sudden move higher. That fast sudden move higher takes us probably into a peak. It's an overbought crest for the July high that we sell off from through multiple support levels. We have a notable reversal, we have mixed behavior, probably see the July low twice, but there's a notable decline into a low towards the cusp, the end of July or on the cusp of August, July. There's probably a low here, but this is a little, it's not the most reliable. I don't know if I would bank money on it because there's also highs here, and I feel much stronger about the highs than I do about the lows. It could be both, but I wouldn't bank on the lows in this case. I would just be very careful around here. There's a pop and a drop at the July low, indicating we probably do see the July low twice, another indication of the July low twice. And the later part of July, we have a sideways fluctuating rally that precedes a decline. It's pretty mixed behavior out of July and into August. U-shaped dip from a peak in August back to a peak, or U-shaped dip from a peak around the cusp of July, August, back to a peak in the later part of August. Sideways rotation at the August low, and on an important support level on a 1 year chart scale. There's a prominent peak within close time proximity to the August low, prominent peak on a 1 year chart scale, and then the August high forms when we have a rally along a diagonal trend line and ends with a fast sudden move higher and a breakdown through that diagonal trend line with increasing volatility on the way down. Early September, we have a prominent move higher and then a full retracement of that move. We attempt to establish support near the September low. I'm not sure how we do there, but we do have a lot of volatility in the later part of September where we most likely revisit a price level important on a 1 year chart scale. We most likely revisit it. Like it's highlighted here in September. We most likely revisit it either in September or in October. The September high, which is likely near the start of September, we have a failed attempt to break through key resistance, probably the resistance from August, followed by a decline through key support. And it's an important trade opportunity. It'll stand out when we look back at 2026. It'll really stand out amongst other opportunities here. There's probably a big move. You might be able to make money like really fast there, something along those lines. I'd pay attention to the September side, and then the Ace of Swords price level towards the later part of September, because we'll revisit that. You can use it as an exit for a long position. In early October, we have a pop and drop with a trade opportunity on that drop. I'll talk about in more detail. The October low forms towards the later part of October. After multiple decline through multiple support levels, and it looks like the later part of October we decline to revisit support that we recently met in the not too distant past. The October high, which looks to be probably mid-month of October, we have this rally there, offering trade opportunity. I'll talk about it. Turns over mid-month, and we end up in that decline. In early November, we have a near overbought crest that we sell off from through multiple support levels, probably end of the first week. The November high forms when we have a period of sideways rotation, and then a big move higher into the November high. The November low forms when we have 3 pokes through the same trend line followed by a sharp drop into the low. A lot of price change to meet that November low. And the later part of November, we've got a prominent peak on a 1 year chart scale and a rally that turns over into a low. Early December, we've got a notable move through key resistance on a 1 year chart scale. We stay above it briefly, creating a peak before we break back down through it shortly thereafter. And it looks like that December peak is actually a full retracement. So we break through resistance, stay above it briefly, and have a full retracement back down through that same price level shortly thereafter. Prominent peak towards it looks like there's another prominent peak. So there's a prominent peak in early December and a prominent peak in late December. There is some possibility of highs here, but It's going to be a notable high, not necessarily a highest high, but I'll put it in there because there is some possibility. And there's a trade opportunity in the later part of December when we had a decline to and through support to meet another support. We rotate sideways along that support before breaking down to multiple supports into a trough right on the cusp of December and January. And the December low forms when out of a decline. There's a big move from the bottom of the range all the way to the top of the range. The sneak preview card for 2027. There's a notable low there in 2027. We'll look at that in more detail in the multi-year reading and see where this reading fits into that puzzle in the paid version. And there's a rally out of that low, increasing with momentum moving forward in time throughout the year. That's the public version of Kadena, my friends. I'm going to get into the timing of the highest highs and the lowest lows, as well as the trade opportunities and what to look for as far as entry and exit into and out of those trades. We'll look at the cross-trading congruencies, the different time scales, and any price level information that we may be able to extrapolate. All of that in the paid version. I'll see you there. Everybody else, let me know what you think by hitting that like button. As always, make sure to follow that rule of karma. You know where to go. You know what to do. Blessings to all my angel investors. I'll see you guys on the next one.